Hi, this is Randy Finney with Right Side of the Chart, and today is Sunday, February 4th, 2018. Wanted to do a quick video on the broad markets. Got to wrap it up quick before the game begins here. Just kind of take a look at what I think will happen next week, and there's not much of a need to recap what's already happened. I covered the markets on Friday, but this is the 60-minute charts I've been covering. And you can see the breakdown of the Nasdaq 100 meltdown. So far, we've hit my minimum targets. A few weeks back, when we were back here, I was calling for roughly a 2 to 3% pullback. But as I mentioned, as we got higher, that pullback would even increase more than 2 or 3%. So we've already had that much, and then some. And I'll tell you where I think we're going. Um, my suspicions are we're going to on Monday, tomorrow morning when we open up. I think I see a little downside in the morning, just a little slight undercut of Friday's lows followed by a bounce. So I think there's a tradable bounce play this week. I would not bet the farm on it because we've had some technical damage on the charts, on the dailies and on the weekly charts. And I talked about that before. That after as these 60-minute charts started playing out, we'd move out and focus on the bigger picture. Again, just based on my experience, my read on the chart, I'm leaning towards a bounce tomorrow, probably after a little bit of low, maybe a gap down or a sell-off after the open if we open higher, and then a reversal, and probably trade up through at least the first half of the week. But again, I cannot continue to reiterate that the bullish sentiment, the extreme overbought readings. I think we hit 87 on the RSI on the S&P 500 recently, the daily RSI, and I don't ever recall reading that. At least not going back, for many, many years. Let's just say that. So this New Year's rally didn't come after a correction like a lot of sharp rallies have. The New Year's rally came after the markets were already up, and so I'm going to tell you this: I expect the New Year's rally to be faded 100% and then some in the coming weeks to months, but I see a little more upside. And I want to show you where my downside targets are. Now, in case we happen to just pick up, gap down tomorrow and continue to sell off impulsively like we did last week, this is a support zone I'm targeting. These are the NQs, the NASDAQ 100 futures. So anywhere from this zone right here, these two lines, you can see it 63.85 to about 64.40. That's my if things get ugly this week scenario. I don't have the bullish divergences that I like to see on the 60-minute charts to reverse for a multi-week swing trade. That's what I usually like to see, just like we had divergent high here. And I still think that the markets are on a sell signal. If you're a swing trader and you shorted the breakdown of those 60-minute uptrend lines, we were highlighting those. I think you're going to be fine. I don't see your trade getting underwater. But if we do snap back and back test this range here, that would be an ideal bounce target. Remember, we had this trading range, and this was after the breakdown. This was sell signal number one, of course, when we broke down the uptrend lines on all those 60-minute charts, and then this was sell signal number two, as I mentioned last week. We're tapping on this level, and I said eventually you tap long enough on support, and it's likely to break. Particularly when the charts indicate that. So there it is. We broke and we had an impulsive sell-off, but now we have quite a bit of support. This is a support zone right here, these two lines here. So what I could see happening tomorrow would be whether we open up or we gap down, either way, a move down to this area, and then a reversal. So if you're an active trader, and you see a reversal come, maybe look for a 5 to 15 minute, even a 60-minute candlestick, some type of reversal stick or a stick pattern, and then you can put a stop below the lows at that point and try to swing up here. But again, if you're not a very active trader and you were able to short up here, great. Hold on because I think there's more downside in the coming weeks. And if you didn't short, but you want to get short, well, not very objective right now. We're in the probably about halfway to where I think this correction will end before a resumption of the uptrend, or at least a swing trade we can position for, that might last more than just a few days. So that's the Nasdaq 100. Let's look at the S&P 500 60-minute chart futures. Again, the futures haven't started trading yet Or have they? Actually, yeah, it's 6 o'clock, so I guess things are now trading. Here we go. So we're coming up on support here. I had a support line right here, 27.36. We're not far from it now. All the indicators are still pointing lower. But this right here, these two lines are my what I call if things get ugly target, 26.74, about 26.75 to 26.98 or so. And so there, now we're at support right now. As I said, since I started this video, futures started trading. Let's take a look at some other charts here real quick. Daily charts. All right, this is the S&P 500 daily chart. As I said, we recently reached some rarely seen overbought levels. The RSI exceeded 87, just over 87 on the daily RSI. And as I said, this is, if I put a hash mark here, horizontal line. This is the beginning of the year. So this New Year's rally, when you zoom in, that's what I was focusing on the 60-minute charts with that trend line. Like I said, this didn't come after a correction. This came when the markets were already overbought. That's why I cannot rule out more impulsive selling. This was, I'll tell you, very indicative of a blow off top. It doesn't have to be the blow off top of the bull market. It certainly could prove to be. So I'm keeping all my options open. I'm just trying to tell you right now, I'm keeping things light. Where I think this thing is going before all is said and done, before the next decent rally, down here, about 268.55 on SPY. That's about another 2.3% lower. I think we'll get a bounce from there, something like this. Although I don't think that'll be the end. So a little move down there, bounce, and ultimately, before I want to position for any type of swing trade lasting more than a while, more than a few hours or a few days, would be a move down to this uptrend line here. Let me zoom out a little bit. This is the primary uptrend line on the S&P 500. It goes back all the way to the beginning, early 2016. It's this orange uptrend line. A lot of reactions. Basically, we just haven't visited that trend line in a while. And what I mean by visited it, tagged it. This is where it begins. We tagged it here. We tagged it here. And we've gotten quite a bit of ways from there. So zigzags aside, if you're a swing trader and you're already short, I think we come down here and it could be quick, but I think somewhere around there we might get a reaction off that 268.55 level, something like this. Maybe even overshoot it intra-week. I could certainly see that. That would probably suck in a lot more shorts, scare out some longs, and then see us reverse. And I think what a beautiful scenario would be for a longer-term swing short would be to punch up there, take out the highs, the recent highs, and put in a divergent high here, because as you guys know, it's not an absolute necessity, but I love to see divergent highs and divergent lows on the daily time frame to position for multi-week to multi-month swing trades. In other words, trend changes. So if we got something like that, a little push up after we hit this uptrend line, market kicks up, makes another high. Bullishness would just be through the roof. If you think everybody was bullish, last week, heading into those highs. Wait till you see the market take out these previous highs, and then that would set the stage, I believe, for a breakdown of that primary trend line, and quite possibly kick off the next bear market. Bear market meaning a drop of 20% or more. Again, kind of getting ahead of myself a little bit, but I'm trying to give you my near-term thoughts, near-term trading plan for longer-term investors that are managing 401ks, IRA money. All the trend indicators except the very shortest are still very bullish. So, there's not a lot of reason to go out blowing out your entire 401k out into cash right now. However, I can say this, and I've said it for weeks and even months now, the risk reward in the markets is very poor right now, regardless of the underpinnings, the strong economy, you know, economies around the world firing on all cylinders right now. As I maintain, a lot, if not all of that, I believe has been priced into this market. So at least in the very near term, the risk reward is skewed to the downside. There's probably going to be some more downside. Again, we may get a tradable bounce tomorrow if you're a quick trader. How far that goes, I just showed you on the 60-minute charts. But this is my intermediate term scenario right here, is a move back down there. And let me just add that, there's always got to be plan A, plan B, and plan C. You have to stay flexible. If this trend line breaks, that trend line off the early 2016 lows, then I think we're going down here. You can see some of the key support levels I have on the SPY, 248, 27, maybe a breakdown there and a back test. That would provide an objective shorting out there as well. So that's SPY. And let's take a look at one other chart. Yeah, that just shows a little basically the same thing. I'll look at QQQ. Here's a trend line. This one generates, actually it does go back there a ways, but you can see it pick up here off the July lows. So a lot of reactions. This is a pretty well-defined trend line. This is a very significant trend line. I always talk about how chart patterns, trend lines, support levels are commensurate with the time frame you're trading. Up until right now, really in the last few weeks, I was focusing on the 60-minute charts, focusing on those 60-minute uptrend lines that define the New Year rally from the beginning of the year, and therefore I was looking for a pullback of 5% or so, and now we've gotten that. However, that has, like I said, has inflicted some technical damage. We have some bearish candlesticks, even especially on the weekly charts as well right now. However, we're well above this trend line. So I would be, let's just say, surprised but not shocked to see us just melt on right down through there. My strong preference would be to hit that trend line, even if it's an intraday overshoot, and that wouldn't surprise me one bit, meaning throughout the day we go there, but we close back up, print a daily close above it, and get at least one more reaction off there. And again, in a perfect world, what I'd love to see would be that divergent high there. So that should have been a trend line, but same scenario that I drew on the SPY a minute ago. That would be lay the groundwork for a beautiful swing short on the markets. But a lot of work to be done. So let's just focus on the near term, see what happens there. It's just a bunch of micro levels. I will say quite a bit more goes into my analysis. I've studied the charts for hours today, poured over the charts over the weekend. I'm sorry. I do have a lot of trade ideas, and I did say that I would get those out for the members of the site. However, based on everything that has happened and the fact that the most objective shorting entry was when those trend lines broke, and leading up to that, there were a lot of charts setting up, and we've done very well. We had a lot of short trades either hit their final or second price targets just on Friday alone. So we had quite a bit of, we've done very well on the shorts, and I need to get some more out there. I have a lot. I just would much prefer to see what the market does this week. Again, I'm leaning towards a little downside and then a bounce early in the week. And I would prefer to have a bounce back to resistance before putting those short trades out there. But I will most certainly start to share those with you guys. If to not, maybe tonight after the game, although I doubt that. I'll probably wait till tomorrow, maybe do a quick video with some of the short trade ideas that stand out, and then I'll take my favorites and put those on as official trade ideas. This is the VIX, something else that's gone into factored into my analysis. I've had these lines here forever and a day. I have not modified this chart in a long time. And you can see where these previous rallies stopped. This was a resistance zone right here. When I have two lines in close proximity to resistance levels, that's a resistance zone. Now, can we blast through it like we did here and like we did back here? Sure, we could, but it's capped all the advances over the last year plus in the VIX. And so that also aligns with the fact I see some key stocks, the market's coming up in some support levels, and I'm thinking we're going to fade that, have a pullback in the VIX, and that would align with a bounce in the market. For those of you who are gold members of the site and frequent the trading room, UV, type that in wrong, UVXY. We had a great trade on this. I shared this in the trading room, starting right back here, mentioning 1030 as a key level, break above 1030, listed these targets. We broke above 1030, popped there, hit that $11 target right there, went on up to the 1269 target, pulled back. Somebody asked, was it a buy there the other day in the trading room? Most certainly, that was a very, the top of a basing pattern, if you will. Very well defined resistance level back here. And in technical analysis, once resistance is broken, it then becomes support. So that was an opportunity to recycle back in at 10:30 and then swing up. And I revised on Friday. I revised my final target, had it up here originally, that upper line. I revised it to 1423. And again, before we even got there, you can see we hit a high of 1422. And I always mention when I put up unofficial trade ideas like this was in the trading room, these are actual resistance levels, not price targets. I always set my price targets just shy. In fact, I posted taking profits right about here on Friday. I said I was just going to get out, even though that was the final target, because I was looking for the bounce this week. But for those of you that took it, if you took the breakout at 10:30, that was a gain, profit of 38%. You even had a chance to recycle back in there if you took profits there and do even better. So some great trading ops lately. This is what swing traders live for. The last quarter, 2 quarters was miserable. It was very tough in the market. It was great if you're an investor, but traders don't make money in a slow, steady grind with record low volatility. This is when traders make money. When volatility spikes, you get these quick moves. You can trade long and short. And again, if you're an active trader, there's intraday trading ops, 1, 2 day swing trading ops. But if you're a regular swing trader, just keep in mind that right now, I strongly favor more downside in the coming days to weeks. Um, and that may happen this week, very well. But my preference is, and I told you guys in the trading room, I closed out a lot of my shorts, even took some longs to hedge and bounce into next week. Leave some swing short positions on, but I'm looking for a bounce early next week, and then ideally to recycle back in short. Um, if I missed anything, I'll follow up. All right, kickoff's in about 10 minutes, so I'm going to wrap this one up here, and I will follow up with you guys in the morning. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.